Here's a detailed summary of Visa Incorporated's fiscal Q1 2026 earnings call, designed for easy reading aloud. Visa Incorporated fiscal first quarter 2026 earnings call summary. Good afternoon, everyone. Today, we'll summarize Visa's fiscal first quarter 2026 performance. The company reported strong financial results driven by resilient consumer spending and strategic advancements across its service offerings. Key financial metrics and performance. Visa reported net revenue of $10.9 billion, a 15% increase year-over-year. Earnings per share, EPS, also saw a 15% rise. Payments volume grew 8% year-over-year to nearly $4 trillion. Processed transactions increased by 9% year-over-year, totaling 69 billion. Growth pillars and revenue breakdown. Visa highlighted the performance of its three key growth engines. Consumer payments showed strong growth driven by payments volume, cross-border volume, and processed transactions. Commercial and money movement solutions. This segment was a significant standout, with constant dollar revenue growing 20%. Commercial payments volume rose 10%, and Visa Direct transactions surged by 23% to 3.7 billion. Value-added services. VS delivered exceptional growth of 28% year-over-year in constant dollars, reaching $3.2 billion. VS contributed approximately 50% of Visa's overall revenue growth in the quarter, driven by strong demand across all portfolios, particularly advisory and marketing services. Revenue component performance. Service revenue grew 13% year-over-year. Data processing revenue increased 17% year-over-year. International transaction revenue was up 6% year-over-year. While cross-border volume excluding intra-Europe grew 11%, this line item was impacted by lower-than-expected currency volatility, a less favorable mix, and hedging strategies. Other revenue saw a significant increase of 33%, primarily due to growth in advisory and other value-added services. Client incentives grew 12%, which was lower than expected due to one-time true-downs related to client performance and deal timing. Operating expenses. Operating expenses grew 16%, slightly above expectations, primarily due to unfavorable foreign exchange impacts on balance sheet remeasurement and higher marketing spend, some of which is linked to the strong value-added services revenue, particularly related to upcoming major events like the Olympics and FIFA. Management's forecasts and future outlook. Visa provided guidance for the remainder of fiscal year 2026. Full-year net revenue growth remains in the low double digits, reflecting anticipated lower volatility offset by the Q1 outperformance and higher product utilization. Full-year adjusted operating expense growth expected to be in the low double digits. Full-year non-operating expense estimated to be between $101 million and $125 million. Full-year tax rate now projected to be between 18% and 18.5%, lower than previously guided, due to tax benefits from legal settlements. Full-year adjusted EPS growth expected to be in the low double digits, with a slightly higher range than previously guided, primarily due to the favorable tax rate. Q2 financial expectations. Q2 adjusted net revenue growth projected in the low double digits. This represents a step down from Q1 due to lower contributions from pricing, reduced volatility, and higher incentive growth. Q2 adjusted operating expense growth expected in the mid-teens, approximately 1 point higher than Q1 due to increased marketing expenses related to the Olympics and FIFA, and a comparison against lower operating expense growth in Q2 of the prior year. Q2 tax rate expected to be around 16.5%, influenced by the realization of claim of right tax benefits. Q2 adjusted EPS growth forecasted to be in the high end of low double digits. Key strategic highlights and innovations. Visa emphasized its ongoing innovation across its Visa as a Service stack. Visa credentials. Over 5 billion Visa credentials globally, enhanced by initiatives like Tap to Pay. Now over 80% penetration for face-to-face transactions. Visa Flex Credential. Enabling multiple funding sources from one credential, with 20 million globally and growing, and Visa Tokens. Over 17.5 billion tokens, enhancing digital commerce security, and aiming to replace traditional PAN technology. Agentic Commerce. Visa Intelligent Commerce Solutions are leveraging tokens to enable automated payment workflows, with over 100 partners globally and live production transactions. Recent expansions include B2B payments with ramp and availability on AWS Marketplace. Stablecoins. Visa is building an interoperable layer between stablecoins and traditional fiat payments. They've expanded stablecoin card issuance to over 50 countries, enabled stablecoin settlement with USDC in the U.S., annualized run rate of $4.6 billion, and launched a stablecoin advisory practice. They are also piloting Visa Direct stablecoin payouts. Visa Direct and Commercial Solutions. Continued deepening of partnerships and expansion of capabilities, including Visa Direct to account and cross-border reach expansion. In Commercial Solutions, highlights include the Titan Card for high-growth companies in the UK and a strategic partnership with Edenred Paytech. Issuer processing. Investments in DPS and the acquisition of Pismo are enhancing capabilities. Recent wins include a commercial offering with BancoBiz in Chile and a fleet card offering with FinanceNow in New Zealand. Risk and Security Solutions. Following the acquisition of Featurespace, Visa is providing holistic AI-driven solutions. Examples include Nets expanding fraud prevention and Visa Account Attack Intelligence preventing enumeration attacks, showing significant fraud reduction in the U.S. and LAC regions. CEO and CFO Key Statements. Ryan McInerney, CEO. In our fiscal first quarter, we delivered strong financial results with net revenue up 15% year-over-year to $10.9 billion and EPS up 15%. Payments volume grew 8% year-over-year in dollars to nearly $4 trillion, and processed transactions grew 9% year-over-year totaling $69 billion, demonstrating resilient consumer spending. He emphasized Visa's role as a payment hyperscaler, enabling innovation across the ecosystem with its Visa as a Service stack, including advancements in credentials, agentic commerce, stablecoins, B2B/P2P money movement, issuer processing, and risk/security. Regarding the future, McInerney stated, "We believe Visa is well positioned as a global trusted technology provider to deliver a full stack of bank and enterprise-grade infrastructure that our clients need to build the future of their business on-chain." Christopher Su, CFO. We had a very strong start to our 2026 fiscal year, driven by strong driver growth, a strong holiday season, and continued execution of our strategy across consumer payments, commercial and money movement solutions, and value-added services. He detailed the Q1 outperformance being largely driven by stronger than expected value-added services revenue, lower than expected incentives, and stronger than expected commercial and money movement solutions revenue, which more than offset lower than expected currency volatility. On guidance, Su noted, "For the full year, we have no material changes in our expectations for our adjusted and nominal net revenue growth. We still expect our full-year adjusted net revenue growth to be in the low double digits." He also highlighted the updated tax rate guidance and its positive impact on EPS. Regarding Q2, he explained, "We expect Q2 adjusted net revenue growth in the low double digits. The primary reasons for the step down from Q1 net revenue growth include the lower contribution from pricing, lower volatility, and higher incentive growth. Significant risk factors. While not explicitly detailed as a separate section in the transcript, the discussions implied several risk factors. Macroeconomic environment. While consumer spending is currently resilient, any significant downturn could impact payment volumes. Currency volatility. Fluctuations in exchange rates can impact international transaction revenue. Regulatory environment. Ongoing discussions on Capitol Hill regarding financial regulation, e.g., CCCA, could potentially impact Visa's business model, though management expressed confidence in their engagement and educational efforts. Competition. The payments landscape is highly competitive with traditional players and emerging technologies like stablecoins and BNPL. Geopolitical events. These could affect cross-border travel and spending. Technological disruptions. While Visa is driving innovation, new technologies could present challenges. Highlights: strong double-digit revenue and EPS growth. Exceptional performance in value-added services and commercial and money movement solutions. Significant progress in tokenization and enablement of new payment flows like agentic commerce and stablecoins. Resilient consumer spending during the holiday season. Favorable update to full-year tax rate guidance. Lowlights. Lower than expected international transaction revenue growth due to currency volatility mix and hedging. Higher than expected operating expenses, driven by marketing spend associated with major events. A slight step down in U.S. payments volume growth in the latter part of the quarter, attributed to a Visa Direct client migration and other minor factors. In summary, Visa delivered a robust start to fiscal 2026, demonstrating strong execution across its growth pillars and continued innovation in evolving payment technologies. The company remains confident in its strategic direction and its ability to drive long-term value.